Well, for more insight on China's foreign trade and overall economy, I talked to Yukon Huang. He's a senior associate in the Carnegie Asia Program. I started by asking about the weaker-than-expected trade figures.
The month trade information is actually very deceptive. You have seasonal cycles in China, you have seasonal cycles in the West. They could go up or down. But basically the trend is that both the growth of exports and imports have stagnated. They're actually falling. Imports are falling faster than exports. So China is generating a trade surplus even as export volumes are declining. And last month the numbers were a little bit below what people expected, but the previous month they were a little bit better than people expected. If you average it out over the last 3, 4, 5 months, more or less China's on the same track as we had expected. And I think this will continue. It will continue as long as the US and Europe demand for Chinese goods remain repressed. China's actually doing quite well in terms of exports to other Asian countries. And the surplus in terms of East Asia has actually remained fairly significant, and this has been helpful to China.
Now, in terms of some of the sectors which played the biggest role, who was most impacted?
Well, what's happening in China is that growth is being fed by services, not as much by investment. Investment is very much driven by construction and property. And since investment is very, very low and still declining, demand for raw materials, commodities, production of steel, cement, oil, energy, these are all rather moderate these days because you don't need these commodities. So China's growth process is shifting, and we should actually expect this continuing what I call reduced demand for imports of energy materials to continue for the foreseeable future.
Now, something else, obviously a major import we're also looking at is the pork. We see that pork prices have surged, and China is both the largest pork producer and consumer. So what sort of impact do you think that's going to have on consumer inflation?
Well, first of all, people are worried because consumer prices for pork have surged. So you hear numbers like 20, 30, 40% over the last couple months or half a year. This is a very good thing because pork is essentially the basic item consumed by the middle class. If prices are surging, it means that demand for food is still continuing to be strong. Wages are still holding up. So it has an impact upon consumer prices, but the impact is relatively modest. Consumer prices are only going up by 2 or 3%. Industrial production prices are actually still declining. There's actually a greater fear in China that there may be price deflation rather than inflation. So all in all, I would actually think this is a good thing. But what does this mean? It means that China's capacity to produce all the pork it needs is not good enough. And that's logical. This is the world's largest demander as well as supplier of pork, and they can't get enough at home, and they're going to be importing a lot more from abroad. So all in all, I actually consider this to be a good sign.
Now let's look at some of the headwinds. What do you think some of the potential challenges could be? What are the real standouts for you in the Chinese economy?
Well, I think we have to get used to the idea that this is a maturing economy. Its growth of 10% 4 or 5 years ago can't continue. So it's moderating. It's come down to less than 7. We'll go further. In my view, it will go. It probably will go down to 6, maybe even 5.5 over the next 1 or 2 years. So we should not be expecting dramatic changes month by month, nor should we expect a rebound and a surge upward. It would be good, in fact, if the decline levels off.
Now, one thing I want to touch on is this so-called L-shaped path trajectory that Xinhua says that the economy is on. Explain that to our viewers.
Well, you have a decline, and this decline is driven by 2 forces. One is what I call a natural maturation of an economy as it moves from middle to upper middle to high income levels. The other decline is what I call cyclical decline. The global economy is still moving very slowly. Demand for Chinese products are diminished significantly from the past. So you combine the two, and you realize that growth is going to continue to decline. The question is how steeply, and can it level off? And the answer is I think it can level off. So that's why they describe the L-shaped curve. But can it rebound back upwards? And then there's, I think, a big question mark, because it can rebound back up if only 2 things occur. One of the 2 things occur: a sudden surge in foreign demand, highly unlikely, or big movements on the reform agenda internally, so China becomes much more productive. That's why many people are looking at whether or not the reforms are proceeding. And here there is a bit of a question mark, because they have not been proceeding as rapidly as some people have hoped.
Now, market reforms is obviously something that played a very big role, and we saw that mainland shares plunged on Monday. Some analysts are saying it's potential growth concerns. What do you see as some of the major factors behind this?
Well, there's a cyclical issue. They look at month-to-month numbers. Trade numbers are a little bit depressed, so people are a little bit worried about this. They're a little bit more pessimistic, actually, a couple months ago. They don't see any signs that the global economy is getting any stronger, so they don't see that helping China. And they're looking for actions internally. But the reform agenda takes a long time to implement. So the recovery is going to be gradual and slow, and markets are taking a little bit of a pessimistic message from all this.
If you like what you just saw, follow us on social media and visit our website, cctv-america.com.